Joining us now is Anurag Rana of Bloomberg Intelligence. He joins us on Salesforce and its restructuring plan. Anurag, we're looking at 10% of its workforce. Stock is up over 3%. Is this they're losing market share thing, or is this a demand thing, or is this that they hired too many things?
I think it's a mix of last two things that you mentioned. They hired a lot of people during the pandemic. And then after that, you look at IT spending slowing down. Enterprise IT spending is going to be horrible this year. And I think a lot of this is a reflection of that. We have seen other software companies announce that as well. Shopify did it, in last year. And we expect more companies to come up with similar numbers. They may not be 10%, but we do expect similar trends going forward as well.
Anurag, is this an example of bad management? Is this an example of a company that overhired during a downturn, didn't really kind of get a handle on what really the outlook was really going to be, and is now having to compensate for it? If I'm an investor, I know I'm getting a positive reaction in the stock today, but long term, what does this tell me about the quality of the management team at this firm?
So, guys, this is a very common thing in all technology firms. A lot of your sales and marketing and your efforts to, increase your revenue is tied to hiring a lot of salespeople and how soon they get productive. During the pandemic, we saw a massive boost for a lot of the cloud software companies, including Salesforce, and they had to hire blindly at that point. Same thing happened with Shopify. So I don't think it's isolated to Salesforce. I think this is exactly how any business is run, to be very honest.
They have pretty aggressive adjusted operating margin goals of about 175 basis points improvement a year for the next 5 years. How does this go to get them there?
This is one part of it, but I think they can get to it even without any of the big restructurings because they spend a lot more money on sales and marketing than any software company. Salesforce is not a new company right now. They've been, they are the marquee software company out there as it comes to cloud applications. So they really don't need to spend as much on sales and marketing. So we think they can get to this 175 to 200 basis points per year improvement in margins, even without any restructurings over the next 3 to 5 years.
Anurag, is there a macro signal I can take out of this?
Oh, definitely. This is all macro signal. We think all of next year, you could basically pick any software company right now and say how things are going to shape up over the next 12 months. In some cases, the growth rate deceleration is going to be faster. In some cases, it's not going to be that fast. And the question is, what do you really think about it? I mean, deep down, the investors need to think and answer only one question. And the question is, do you think the enterprise tech spending is done forever, or is it going to come back next year or the year after? When I look at stories like Southwest not able to figure out their back-end system or operations, it just tells me there's a long tailwind for a lot of these legacy companies that need to upgrade, which means, next year, I'm going to be happy with what's going to happen to enterprise spending.